Let's take a look at Oracle stock. It's currently up around 11% today. Pretty massive gap up, and in general, the tech markets are doing quite well, despite the Nasdaq being pretty flat. Now, we have to ask the question, is this likely to be just a bear market rally of some kind, or is this the start of a more prolonged up move in the tech sector, which has been pretty beaten down? I'm going to draw in a parallel channel right around here. This looks to me like the kind of structure that price was trading in on Oracle from 2020. Hit the top of the channel, back down to the bottom in 2022, and you managed to break out on this recent run that we've had. Absolutely parabolic move from Oracle. And it seems to me that price has recently come back down to test this particular level, the top of this previous parallel channel, and therefore use it as support, potentially to continue the move higher. That would sort of be the guess that we have to make. Since you are using this as support, there is potential for a move back upwards on the stock. That being said, this is the parallel channel that I think the stock is now trading in and respecting. Of course, this level was essentially the top of the previous parallel channel and now the bottom of the new one, essentially. And we can find that by connecting the lows here in 2025 and 2022. Now, of course, not super precise. Price has wicked on multiple occasions outside of this parallel channel, and of course on the parabolic move still again, getting far beyond these particular levels that we might have expected would provide some kind of resistance. I think this could give a pretty reasonable upside target on the stock if you were to expect Oracle to continue going higher at this point. And that would be around probably $220 or so. Of course, that's going up over time. Taking a look at the indicator here, we can see that we entered a bearish trend in around December. And of course, the stock going down massively since then. We are trying to reclaim the EMAs at the moment, but seemingly not quite able to do that. Will we come back down to fill the gap? You had a very similar pattern on Hims and Hers stock, which I talked about a couple of days ago. As much as we may want to be bullish because we are bouncing from these levels quite decisively, we may not flip this bearish trend for quite some time. Typically, when you have a sell signal and then a nasty bearish trend such as this, if you take a look at, for example, Bitcoin, quite often these kind of trends can play out for quite some time, particularly on a stock like Oracle, where you've previously had quite a bit of outperformance, quite a long cycle. That being said, this up movement here was punctuated by the tariff sell-off, so that's something to consider. But with that being said, we just have to be a little bit cautious. I think as long as the trend is bearish, I'm not necessarily going to be buying this stock. Of course, you can go for that if this is the kind of play you're interested in, maybe targeting, up to $220. But I'm a little bit cautious when it comes to buying a stock that is in a bearish regime. And that's not at all to say that you're definitely going to go down on Oracle. In fact, we got kind of close to the bottom of this parallel channel on the Oracle over SPY chart, which would typically suggest that you get some really nice outperformance once you do hit the bottom of the parallel channel. And likewise, when you hit the top, you expect to underperform the S&P quite considerably. We've come all the way down here, so I wouldn't be surprised if you can get upside movement. Perhaps we are going to first, though, come back down to the very bottom of the channel, which would only represent a 1% or so down move compared to the S&P. So it's possible we may just instead chop around and wait for this level to sort of catch up to us, as you had periods in the past here where you went pretty much sideways on the valuation until the parallel channel caught up with you. And likewise, if we look at the QQQs, we aren't quite yet to the bottom of the parallel channel again. Potential underperformance very similar to with the S&P before maybe we can even head up as high as these previous highs that we saw during the dot-com bubble and the 2008 financial crisis. If you compare Oracle's performance to those periods, it's not quite been as frothy, so that could indicate there's potentially more upside here coming down the line, perhaps if we get Fed rate cuts and the market experiences one final parabolic blow-off top phase before the eventual decline. That is something to keep in mind. So quite interesting to look at the relative valuations with the Oracle chart, as gives us a bit more of an understanding of where the stock may be headed. Of course, since you get these parabolic moves, it makes it a bit harder to analyze using parallel channels, although, as we say, we can still see the downside here of around $140 and upside of $220, in my opinion, is what we're looking at. Worth noting that if this parallel were to break, you would be heading down to the bottom level of the previous parallel that I drew, which is looking to me right now to be sitting around $90 or so, $95, and again trending up over time. So that would be quite a nasty down move. But if there were to be a massive correction in the market, perhaps preceding rate cuts, further rate cuts, then you could imagine Oracle perhaps getting down to those levels. I could imagine, if you got like a 20% sell-off on the indices, then that could bring Oracle down 45%. You would then tag the parallel channels on the relative valuation charts, and that could be a really attractive buy opportunity on this particular stock. But I'm not personally entering this stock at this point. As I said, you may get a bounce a bit higher. So just consider all of this information if you're in the stock. I hope it's helpful. Thank you for watching very much. Have a great day and subscribe as always for more videos. I'll see you next time. Bye-bye.